Hello, hi, hey guys. We are here for our monthly mortgage update, and I'm here with Scott and Marla Wynn from the Wynn and Eagan Team of Citywide, and we are going to be discussing a couple things today. But before we get started, we are live right now on Facebook. This will go to YouTube later, but for those of you who are lucky enough to be in the group live, go ahead and maybe give us some questions that you might have, and we can answer them on air. But I also want to take this opportunity to do a shout out to one of our members, Gina Scheitman, who won our $50 gift card last month for Magic's Grill because she belongs to our 365 Ohana. And if you are a member of that group, which you can find on Move to Hawaii 365, and you are watching us live, your name gets to go in to win one of the gift cards so that you can also have a beautiful lunch at Magic's on the water, like today, what Gina did. And she gave a nice shout out to these guys also for providing that card for her. So be there. And we're also going to be discussing a little bit about the rates. We're going to talk a little bit about appraisals. And we're going to be talking about best business practices in mortgage. Because we had a incident that happened that I want you guys to be aware of and how these guys might approach it. So let's start with Scott on what's happening with rates and anything else you want to say about the market that gives people an opportunity to learn a little bit more about the picture of what's happening right now.
Sure. So in terms of interest rates, we did see a bit of an increase a few weeks back. However, it has decreased here recently. So we're starting to see a decline week over week. So we're in the high twos on average nationwide for 30-year terms. Mm-hmm. Now, obviously, there's a lot of parameters that go into interest rates and such as far as down payment, loan program, credit score, all those sorts of things. But definitely seeing them start to trickle down a little bit, which is nice.
Oh, good. So, I mean, that's, again, we're talking about historic low interest rates. Good. That's what we were going to talk about, too. Remind me. The ability to do the mortgages and don't spend your money. Okay, I'll jump right into this. Yep. 3 or 4 people on this group have actually asked us this question. They're selling their homes on the mainland and they're getting cash in hand, and they're coming to Big Island, and they want to buy a house when they know that they shouldn't put all their cash into their house. They're trying to pull some back and then get a mortgage. So they have cash on hand, and they're asking questions about how much should they pull out, what is it going to cost on a monthly basis to be able to have money to the side, but they're also borrowing money. Let's talk about that a little bit as a strategy for financing.
So just to make sure I understand the question. So the question is they don't want to tie up all their cash in a cash purchase, and instead they want to reserve some of it and get a mortgage instead.
Right. So that way they have money in the bank.
And how much of a mortgage should they get?
Right. And how much, if you're, whatever number you're picking, how much in general do you think that would cost every month for them to pay, to be able to pay that back, so that they have an idea to put that into their expense account for what it's going to cost to live here?
Got it. Okay, so there's a lot wrapped up in it.
I know, there's a lot.
So as far as the amount of money to put down, I think that's the easier way to answer rather than how much of a mortgage should you get, is how much should you put down.
Okay.
Because with mortgages, the risk is what will dictate interest rates. And so the lower the risk, the lower the interest rate's going to be. So basically, 20% is the ideal down payment that most people consider, because at 20% down, you avoid mortgage insurance. Mm-hmm. So that's a good number to shoot for first. Beyond that, you start to see some additional benefits in terms of lower interest rates once you hit 25% down, and then generally around 30% down is where you're going to get the maximum benefit of interest rates in terms of down payment. Okay. There might be some very, very slight variance in benefits associated with going even more down, like a 50% down payment, but not really a huge difference that would be worthwhile. So I think that kind of answers how much money you should put down, and therefore how much you should finance.
Okay.
The other side of that is loan limits. So there's going to be certain loan limits depending upon the price range that you're looking at purchasing. And so there's conforming loan limits for conventional financing.
Oh, that's true. Okay.
And so we want to stay below those conforming loan limits. Do you know?
822 and change.
Okay.
So $822,000 right now is the conforming loan limit. So
in Hawaii.
Okay, that's pretty good. That's pretty high.
Yeah.
That gets you a strong single-family home.
So maybe with running water.
Yeah, maybe you might get a view. You might. So, okay, so then.
Right, so if you're looking at $800 in a max loan amount, 30% down, you're probably looking at around $1 million in a price point, $200,000 down to get to that. And that would be about what you would, I think, want to shoot for. So
okay, so if you if you get a loan for, let's say, $200,000, because you're the math guy, how much is that every single month to pay that back? With the amount of the interest rates being so low.
So there's no real quick, easy answer to that.
Okay.
Other than I will say like probably around $6 for every $1,000 you finance. Okay, so if you're financing $800,000,
Right.
then that's 800 times 6. That's
Right.
7.
48. Is that right? 4,800?
Okay. Yeah, but wait. What happens if you only borrow $200,000? Because
Then-
you already have cash and you're just saying, oh, $200,000.
Then you're looking at like a $1,200 payment.
Okay, $1,200 payment ish to own a home, where you have $200,000 now that you're not spending on your house. You're in that $200,000 is now in the bank as liquid, and yet you've mortgaged the $200,000 just to make sure that you have that liquidity, right? So it's going to cost you about $1,200 a month.
Right. And probably the easiest way to get that is just if you just Google mortgage calculator.
Yeah.
Google has a built-in mortgage calculator right in the search results.
Okay.
You can just plug in however much you're financing and then plug in the interest rate. So just plug in 3 for right now. And that'll give you a 30-year fixed interest rate, what the monthly payment would look like.
Okay, then let's talk about this. It's still a hot market. Buyers are still dealing with trying to compete with other buyers, right? Sellers are looking for that 100% cash issue, right? What are you doing when you're competing in a multiple offer where you're not, even though it works for you to put 30%, you'll get a 30% mortgage, but maybe that doesn't look good on paper in terms of trying to get that house.
Here's
Thoughts?
how I would look at it is if I'm selling a house, what do I want? Right? I think there's 2 things that I want. I want the highest net price I can possibly get.
Right.
That's probably my number one.
Okay.
Although a very close second would be confidence that that deal's going to close.
That's right.
Right. So I think that most sellers, if they had somebody that was putting 50% down, let's say, and they were going to offer a higher price than a cash buyer, I'd probably be willing to take the financed buyer over the cash buyer because I'm going to end up getting more in the long run. And it seems to be that they're very well qualified because they're putting a significant amount of money down.
Okay.
So I don't think that somebody has to be a full cash buyer, has to really do a lot to set themselves apart other than offering a higher price.
Yeah, they can also compete if they have more cash down because you can compete with a cash buyer by offering more, and they have the cash to offer an appraisal gap, which we're going to talk a little bit about appraisals.
Right.
But that just basically guarantees the seller's going to get their purchase price regardless.
Right.
And I know, so if you can outbid a cash buyer, I think you can still get it.
Okay. Okay. Next question.
I got a question, Brad. Hello, Brad. He asks, with the surprise increase in consumer inflation in April, do you expect any changes in the interest rates?
So eventually, the question is the inflation, right?
Yeah.
So as inflation goes up, do we expect that interest rates are going to go up? And I think the answer is long-term, yes, it will. I think that there's no other way around it other than for interest rates to eventually go up. But I don't know exactly when that's going to occur, of course. So the quick answer is yes, interest rates will go up because everything else is going up. The cost of things are going to go up. They're going to have to decrease the demand for housing, and the way that that's going to happen is through higher interest rates, and so that's going to play into the whole economic picture. But economics are never quite as simple as it seems, and so you might think that interest rates will go up and then something will shift in the economy and that will shift things to stay low for a while. So I think everybody in the industry, as far as like Mortgage Bankers Association, National Association of Realtors, they all anticipate that rates are probably going to end up, at this point they're estimating right around 3.5. At the end of last year, they estimated that they were going to end at around 3.18%, but we already hit that and then bumped back down, and now they're kind of adjusting it and saying around 3.5 is where they expect interest rates to be by the end of the year. Long term, like 2024, probably in the 5s is what they're estimating. But there's no way for any economist or anybody to accurately predict that because there's way too many variables to know what is really going to play into that. So
They did say though, real quick, is I was reading some stuff too, and they said it was going to take 6 years to try and build enough housing to try and quell that supply and demand problem. So 6 years from now is maybe when housing supposedly is going to be on a better level, but that's 6 years from now, right? And so with the interest rates too, it's like, okay, well, maybe they'll be at 5% 6 years from now when everything's normal again. But in the meantime, again, if you can get in because that low interest rate experience, then you're in, right?
right.
Well, and values are going to continue to increase, and everybody expects them to continue to increase. Every expert that you read their forecasts. We're not in a housing bubble. They're expecting values to continue to increase. So get in as early as you can, especially with interest rates low. Even if it's not like the preferred house or whatever, like get into something lower maybe than where you would like to be, and then build the equity and then move up later. But just getting in the market would be really important.
When they build more houses, right?
Yeah.
I know there is some good news though, you guys. I've been hearing some like little around the old water cooler of housing development here on the island, and there are a couple little developments that are simmering, and now with the demand, a lot of people got wiped out in the recession here, as you know. And so now that there's a steady demand that looks like it's going to be like, just keeps coming, there is some developments that are actually kind of cutting around there. So I'm not going to say it's going to be 350 homes like they wanted to build near our house, but there are definitely developers on the island working through the planning department trying to get different things built out.
Nice.
New neighborhoods and things like that. So,
awesome.
Yeah. I mean, awesome. Not too much, so it's not going to affect the traffic, but enough that you'll have some more to choose from, hopefully, in the next, 2 or 3 years. So, there you go. Question?
No.
Okay, so let's talk about the appraisals. So, one of our preferred realtors, Lance Owens, asked a question and said, hey, he's starting to see that appraisals are getting very close to their contract price, and he wanted to know, what are you guys seeing?
Values are not increasing fast enough. So yes, we've had some appraisals come in below purchase prices recently, and I think we're going to continue to see that. It's interesting because we had one transaction that the agents refuted the value, and the day that the inspection took place, 2 properties closed that were actually comparables, and so they submitted those, and because they closed the same day as the inspection, the appraiser was able to take those into consideration, and he increased the value by $45,000.
Oh, wow. Okay.
So it's going to be really important for listing agents that are, to provide appraisers with information at the property so that they're giving them as much information as possible up front, and then just working with your lender to go through that rebuttal process in the event that it comes in low, and hope that you have some additional information to get those values up. But I think appraisal gaps, and that's going to start becoming a thing of the future, pretty common.
Yeah. Okay. And in terms of what you guys are seeing out there, in terms of what you're closing and what you're dealing with and things like that, is there any little, tidbitty information that you'd like to share?
Well, I think one of the strategies that we're using for all of our customers is maybe you don't put 20% down, maybe you put 5% down or 10% down, and then you use the additional cash to offer an appraisal gap, because that looks really attractive to the seller, so that they know for sure 100% that regardless of what happens with the appraisal, they're getting their purchase price. So that is working in other markets, and I think that will start working here too.
Good. That's a good strategy. Write that down. And then when we were talking last month about kind of what are you guys seeing in terms of what's selling and things, we were talking about the Condotel experience again, and it came up again today about what people can and can't lend on, and some people asked some questions on this thing about oceanfront condos in Kona, and which ones are the best ones or whatever. Let's just touch again one more time on the difference between trying to get financing on a condotel versus financing on a normal condo complex.
So Condotel, just to be clear, is a complex that has units that are owned by independent owners, and they're part of a rental pool that the HOA then rents out on their behalf, but they do it as it's not like somebody's renting from Julie. If you own a condo, they're renting from the pool from the management company.
Okay.
So that is the definition of Condotel, is that they have those units in a rental pool, and those are very difficult to finance now because Fannie Mae and Freddie Mac.
Before we move on to that,
go ahead.
To help somebody figuring out whether or not a condo is a condotel, is if you just do a Google search for that particular condo community, and if you see fairly quickly that there are online rental or reservations available, that's a pretty good indicator.
Caveat,
Sure.
if the rentals are offered by the HOA and not by the individual owners on VRBO or Airbnb or something like that. So that's the important distinction there. Okay. If it has a front desk, that's probably a condotel.
But let's say Kanaloa. Kanaloa doesn't really have a front desk, do they?
Well, it doesn't have to.
Okay, so there you go.
Yeah.
So they do have different things.
So-
but Kainaloa does do that pooling experience, right?
Right.
And so does Kona by the Sea,
Yep, that's a big one.
right?
Keo's Surf and Racket is the other one that, like, I don't know who's financing in there now.
Really?
Yeah.
Okay, because again, Surf and Racket doesn't have a front desk.
No, but they are one
They're,
of the
but
biggest.
they're not pooling, though, are
Condotels.
they?
Yeah, rental pools.
Yeah, I didn't know that.
Yes.
Oh, okay. And one of our friends, one of our mutual friends, actually sold out of Kona by the Sea because it's hard to be a capitalistic human being when you're dealing with a pool. Where
Yeah.
if you want to just deck out your condo and get as much money for it as possible, but then it kind of goes into the whole.
Yeah, the rental rates are the same
Right.
regardless of the
What you
quality
did to
of the
your
unit.
house. Yeah,
yeah,
right.
and they would rent theirs out more often, and so it was getting more wear and tear than the other units because it was a nicer unit. So yeah,
So that's.
I'm not a proponent of condotels because I don't finance them. So.
Yeah, there you go. And these guys don't finance, so you know. But knowing that if you're thinking that you're going to go in and put $100,000 in a renovation because you're going to get it all back in terms of the rental experience, that is not always the case when you're in that experience, right?
Right.
So just so you guys know that, because I don't think that I kind of like got that until about a year ago when some of my friends were saying, you know what, this isn't working for us anymore because we want to be able to rent our house more often because we really care about it and we're doing all these great upgrades. And when they're like, oh, you know what, it's not working for us when we can't increase the price because the board says we can't because we have to maintain what everybody else is doing in the complex.
Right.
So that's a thing. So if that's your thing.
But it's not necessarily how all condotels work. That was that particular condotel
Okay.
and how they operate, but
Yeah.
not all condotels.
Okay, so
work
Kona by the Sea
necessarily like that.
specifically. I don't know about Kanaloa if they work that way either. So, but that's something to ask your agent for sure, right?
Yeah.
Yeah.
One big thing just to keep in mind when you buy a property, and I think a lot of people, I mean, buying a home can be a very emotional process, even if it's not an owner-occupied property. If it's a vacation home, a second home, or an investment property, it can still be a very emotional process because a home or a house is an emotional product, right? And so I think people get emotionally involved in this. But I think a lot of times people lose sight of the fact that when you're buying a property, at some point you're going to want to sell that property.
That's true.
And if it's hard for you to buy a property, it's going to be hard for you to sell that property also
Yeah.
because of mortgage financing. So just keep that in mind as you're looking at properties to buy.
Yeah.
That even if you're buying cash,
Yeah.
which not everybody has cash to buy a home,
Right.
what are the financing options to buy that house in case you need to, so that way you know how difficult it might be to get out of it.
Right.
Right. It's
Easy in, easy out.
right. Or hard in.
Hard out.
Exactly.
Yeah, because my mother used to own a house next to a cemetery and she couldn't sell it for anything, but she got in really well.
Yep. Exactly.
So that's okay. So that's good to know. And you know, just being in a position to be able to access the wider market is a good thing, right?
Right.
Okay. So in general, what else are you guys seeing? Are you guys seeing a trend? Are you guys seeing anything else out there that people should know about, like what's happening with mortgages and what's the demand for you guys lately? Or
There's a huge demand. I mean, I guess one of the things that we're seeing is that we're getting more and more and more buyers pre-approved than we've ever had before.
Wow.
Because it's harder to get into a house than it has been before. And
Yeah.
so the interest isn't going down. And obviously we know this, right? Which is why we have a shortage of inventory. People are harder to get in. But I will say is that the people who want to buy, I'm confident will find a way to buy.
because they're really
Yeah,
They're motivated.
Right.
Okay.
Yeah.
If you're kind of dabbling in this market, I don't think this is the market for you.
No.
Like, you got to be,
No.
if you're going to buy a house, you got to be a serious buyer. You got to go through all the efforts. You got to do everything you can to set yourself apart. You got to be willing to do things that maybe other buyers aren't willing to do. Offer more, change your financing structure so that you can include those appraisal gaps. Offer more earnest money. Offer more
Waive
guarantees to the
inspection
seller.
items.
Oh yeah.
All those sorts of things that maybe other buyers aren't willing to do.
Right,
But
right,
if you're serious and you want to make it happen, I'm confident that you'll make it happen. It may not be in the next week or the next month, but it would
Yeah.
be in the next
And just
few
try
months.
not to get discouraged.
Yep.
Yeah. Yeah.
Question is, are there any trends in buying land?
Yes, there's plenty of trends in buying land. I'm getting questions all the time about buying land. People now are like this. Oh, one today. In fact, I told him to watch this. I don't know if he's here tonight, but he'll watch it later. He said, I want to buy a piece of land. I'm going to put a tiny house on it so that we kind of get our act together. And then we're going to build the house of our dreams next to it and then use the tiny house that we put on that land as an Airbnb or a Rohani unit.
Good for them. That's awesome.
And I said, okay, well, make sure that you are getting your permits and that you know what you're going into. And I said, that's not going to happen in a subdivision anywhere near Kona. I go, maybe if you're like thinking about East Hawaii. And so what do you guys think about that with the whole land purchase experience right
I'll give
now?
my 2 cents.
Go ahead.
So
Go ahead,
I
let's
think
hear it.
there's a couple of things. One is finding land is challenging in and of
Enough,
itself,
yeah.
right? And then building is getting more and more expensive every single day as
Every
lumber
day.
prices go
Yep,
up.
yep.
And everything else, the cost of goods goes up. So
And
that
labor.
becomes more expensive, exactly. Not to mention that what we just talked about earlier, which is we anticipate interest rates are going to go up in time as well. So if you are going to buy land with the anticipation that you're going to build a house, just know that you're going to probably pay a whole lot more for that house than what you could buy for now, even though it's a super competitive market. So, and
Okay, ding, ding, ding. That's a hashtag moment right there, what he just said. So, right? Because it's important if you're going to think about that. If you don't know the cost of coming
Yeah.
up into the future, but you know the cost of buying something right now,
Right.
that is a very important
And when
thing
you're
to
working
consider.
with a builder and not like buying from a builder, like if you're buying a spec house or something like that, the price is the price and you
Okay.
pay for the upgrades, whatever. But if you're working with a builder and prices increase on materials,
Right, like copper and wood.
yeah, they're going to pass those on to you. Like they're not just going to eat it.
Right.
we have somebody that we know that's building a house right now, and the cost of their house has gone up like 20%.
Yeah.
And they're in the middle of it. Like
Oh,
they're
sweet.
already in the process of building. It's not like you can just really stop
Stop,
very well. And yet they're just stuck. Like they're having to pay more. And so
Yeah.
that's the risk. There's excitement associated with buying land and building your dream home and customizing what it's going to look like and the floor plan and the finishes and all that sort of stuff. I get it. Like we've built a house. We've experienced that. It can be a very exciting process, especially in somewhere like Hawaii, right?
Right.
But at the same time, there's a lot of risk that goes along with that, a lot of unknowns that go along with that, and it's not for everybody. And
Right.
I personally don't think it's the solution to the low inventory problem.
Okay, so that's okay. So you guys know, when this whole thing started happening with the prices of homes going up, Lance said you're going to flee out of single family homes into condos, and if that doesn't work, then everyone was fleeing into open land to build, and now everyone has flown into all 3 sectors. So now there is no affordable, cheap experience on this island at this point. Everything has its expenses, right?
Yep.
So thinking that you're going to get land unless you buy it in Lava Zone 1 or 2, and now Mauna Loa, whatever, it's now the risky experience of like now you're running with market forces, right? And then they came out with the inflation rate today, and they said that all the building materials have gone skyrocketing. That's one of the biggest that's what inflation is happening in this country right now on building materials. So if you can't hedge that, that might not be the realm you want to walk into, right?
Well, especially if you're going in with limited resources,
Right.
Yeah.
because that if you don't want to lose everything because you're a little overextended and costs went a little bit higher than you were anticipating.
I just
Right.
don't see it as the alternative or the solution to the low inventory problem. And I
There
think
we go.
that's what a lot of people are turning to
Yeah.
is
It
if I can't
was
buy
2
a
years
house,
ago. Yeah.
then I'm going to buy land and build.
Right,
Well, I
that's-
don't think
yeah.
that's an equivalent
Thing
situation.
anymore.
If you have always wanted to build and your plan is to eventually build a house, then that's your plan.
Mm-hmm.
If your plan is to buy a house, then that's a different plan. Like there's a different plans, I
Right.
think.
But
And-
to try and buy land because you're trying to save money from buying a house, that's not working.
right.
No.
No.
Okay. Eric.
What's the average time to close a house these days? Close a loan/house these days?
So 45 days?
Okay.
40 to 45 days?
Still.
Depends. Like
Okay.
appraisals are probably the one thing obviously we can't control, and turn times on those are about 2 to 3 weeks. So
Okay.
that's what's taking kind of the longest period of time right now.
Okay.
So-
And but
Just to address like timelines, right? So a transaction of buying a house with mortgage financing includes several steps. So first it's getting a house under contract and then delivering earnest money. And then after that is doing your inspection. And then after that is doing an appraisal. And then after that is doing underwriting. And after that is getting conditions fulfilled. And then after that is getting final approval. And then after that is scheduling your closing. So it all lines up, but it doesn't have to line up like that. You can overlap these things, and a lot of lenders don't necessarily do that. They'll
True.
wait until inspection's done to order appraisal, and then they'll wait to submit to underwriting until the appraisal's done. But one of the things that we do to help speed things up, to help compete in today's market, is we will submit to underwriting before we have the appraisal. So that way we know what the conditions are that we're going to need, so that we can go ahead and fulfill those while we're getting the inspection done, the appraisal done, and then we can submit it all back in and kind of finalize things. So rather than having it all linear, it can overlap a little bit and help speed things up.
So you guys are really good at maybe, helping deals close maybe a little faster than a lot of different lending companies. And then that brings me to my story today. So Eric and I have a friend that was selling a condo, and Eric was the half listing agent on this, and we kept waiting for the deal to close, and so we're like, what's going on? What's going on? And the other agent that we were working with said, we can't seem to get a hold of the lender to tell us what's happening with the deal. And that went on for 2 weeks. And I finally said, isn't there a point where that doesn't work anymore? And yes, that's exactly what happened. Then the deal fell apart. And so I'm like, what happened here? And having a lender go dark on these people really messed them up. And it wasn't a big bank. Actually, it was a local lender. And I wanted to bring that up in the sense that I think sometimes people don't realize all the things that can happen along the line to getting a home. And having your lender go dark on you and not talk to the seller's agent about what's happening is not a way to do business in the deal, right?
True.
So let's talk about what do you guys think about that kind of concept?
Well, I think we got to back it up to before you go into escrow.
Right.
And the pre-approval process, which is making sure that the lender does a thorough pre-approval. They've got your application, they've run credit, they have automated underwriting, and they've gathered every piece of documentation they need to verify all that information. So that going in, you're a really strong credit qualified buyer. And then it's just contingent on the type of property that you find and making sure that you also qualify or that property qualifies for financing that you can offer.
Okay. So let's say this condo, which it was let's say $700,000. And they were chosen among 5 other people that put offers in too, just, And again, I'm not the expert on, that's why I kind of come to you guys as a consumer concept. If you were able to successfully make an offer for $700,000, doesn't that already mean that you should have been able to get pre-approval from your lender saying you can get $700,000 for your loan? Isn't that what that is? Yeah.
Hopefully.
Yeah, that's why they ask for pre-approval letters.
Right?
Yeah.
So all of a sudden now you're in escrow and it's been 45 days and you still don't get the loan and then no one is talking to you. That's not normal, right?
Yeah.
Okay. But also,
I mean, I don't know.
It happens more
It is?
often
Oh, because
than
I've
we'd
never
like.
seen that.
We've unfortunately taken over transactions in many cases over our years of being in this business when other lenders can't get the transaction closed and stop returning phone calls.
So you've seen this before?
We've seen it many times.
Oh, okay.
When we sold our house in Colorado,
Yeah.
we knew the loan officer who was representing the buyer, and we were nervous from the beginning. And at the end, he had to call and basically tell her she better figure it out. It was not a
It
good
was going to
situation.
delay our closing.
Yeah.
Right.
Yeah, no.
So-
Yeah, well, now this gentleman who's our friend, who should have closed 2 weeks ago, and he's gone off to California now to have his new life, now has to put his property back on the market. And so it's not fair for anybody, really. And then these
Right.
poor people moved to Hawaii, and they were going to move into this house. Now they don't have a house. And this is all based on the fact that the lender
Right.
has issues.
So
So
yeah. Go ahead.
I was just going to say, it's hard to identify up front that this is a potential problem. However, we've all been in those situations, whatever it is. Maybe it's past relationships or it's going to work
Not
somewhere.
current relationships right now.
No. But in those situations where we look back and go, there were a lot of warning signs along the
those
way.
are red flags. They're not returning my phone call.
I'll point out a couple.
Okay.
They're not returning my phone call, right?
Yeah.
Like, I can't tell you how many times where somebody is contacting us, and let's say they're shopping lenders, right? They're talking to 3 different lenders, and they're trying to get interest rates and try to identify who they're going to work with. And so they'll call me, and they'll get my interest rate and my closing costs, and we have a conversation about how we're going to structure the loan. And we then talk about how the best way to shop, and that they need to get the quotes from all the different lenders on the same day, and that as soon as they get the quote from the other lender, call me back and let's regroup. So I let a day or two go by and I follow up with that client just to see where they're at and if they got the quote, and they're like, oh no, I'm still waiting on a phone call back.
Waiting to hear back.
Okay, so as Maya Angelou says, if someone shows you who they are in the beginning, believe what they're
What
saying.
they're saying.
Exactly.
Oh, that's very true. Yeah.
So those are the sorts of things that I think, again, because it's such an emotional
And
purchase,
you also
we
want
overlook
to give
things.
people the benefit of the doubt,
Sure.
I think, because we want to be kind and I mean, for the most part.
Yeah, I totally
Instead of
get
looking
it.
out for your own.
But if you're not Johnny on the spot in financing nowadays, just because the market's running so fast, you need people who are going to be Johnny on the spot.
Or people
right?
do think that they're looking out for their best interest because they want to make sure that they're getting the best interest rate or whatever, or the best terms on their mortgage. So they're waiting for weeks or days or whatever to get the quote back so they can compare, when that should be the alarm bell to begin with, that maybe this is a sign of what's to come.
Right.
If they're not willing to return your phone call when they can earn your business, they're probably not going to return your phone call once they've already got your business.
Yeah.
Just so you guys know, get this, just so you guys, because you're in the business, how fast does it take to get that kind of information and turn it around to a consumer?
What kind of information? What do you
like
mean?
your rates?
Oh, we can do it in a matter of minutes. I
Right.
mean, as long as it's during normal business hours.
So it should not take days and weeks to get
No.
someone to give you back information about a mortgage rate.
No.
Okay, that's a little ding, ding, ding just for you
But
guys.
the other thing, I don't know, were you going to expand on that more? Is that, like Scott was saying, you can't foresee every problem, but when you want to make sure you're working with somebody that you trust to handle the problem.
Hey, so you guys, I'm sorry that we just got cut off there a little bit. Let's continue. What we were talking about was the fact that you want to make sure that you're working with people who have a strategy in place to, if something happens during the transaction, they've got a variety of people basically putting out fires, right? So
Running towards the problem rather than away from the problem.
right, and if your lender goes dark on you, there's probably don't wait for 2 weeks.
No.
No,
A
no,
day
I
or
would have
two,
driven up and
max, without a response.
Two
got the
days.
manager.
I wouldn't go 2 days.
Yeah.
I'd go
Okay.
several hours.
Hours, you guys, because these people waited for 2 weeks and then they lost the deal.
Yeah.
So, so if you Johnny on the spot to begin with shows probably how they're going to react to you through the entire transaction, right?
Yep.
If you can't get a hold of people, that's not a good sign in the very beginning.
Right.
And if you guys are looking at I'll plug them because I'll plug them. Everybody in this group who's used the Wynn and Eagan team has sung their praises, that they're able to get the deals closed, they're able to give them great rates, the service is over the top, great. They work with your strategy and your financing. So I know this is not a commercial for the Wynn and Eagan team, but seriously, they're awesome. And they're also going to be giving a $50 gift card to somebody else today. So, so if you are on this stream and you are tuning back in after we lost you for a little bit, is there anybody out there right now who is live?
Yeah, there's a few people.
Okay, do any of them, are they 365 Ohana members? Can we get anybody to call out if they are or not?
We've got Lance Bond is watching.
Okay, Lance went
Brad
already.
is watching.
Okay.
And Brad says, "Welcome back. P.S. The lenders went dark on us."
But we were right back on it.
Okay, and then Lori Porter is with you guys as well.
Okay, so I don't know if Lori has won before. Has she won? Yeah.
Why don't you
Okay.
ask her?
Lori, have you won before? This is something kind of just like this live experience. On the YouTube experience, they're going to say, "How do we get in on that?" And you know what? You get in on it by going to move to Hawaii365.com.
She said no.
And then you hit join Ohana. And then when you join the Ohana and you get involved, then you can join us live on both the mortgage update and the real estate update twice a month. And you guys can win fabulous gifts and prizes. In fact, one of the fabulous gifts and prizes that you can win is our cool little wine cooler. See, it has a little logo on there. It has a beautiful photo of Kailua Bay that I took. And I am giving one of these away right now. Who's on live right now, Eric?
There's a few.
We've got actually a peanut gallery.
My
behind
sister
us.
is on island, and she is literally behind, like over there
And
with flashcards,
she's doing
making
the
us laugh.
flashcards, and
We're gonna make her come over here in a second.
okay, so we've got Lori Porter, we've got Lance Bond, we've got
And Brad.
Brad.
They've chimed in so far. It says
Okay.
there's 7, but those are all the only ones I see.
Okay, let me tell you guys right now. I know that Lance has won before, and Lori I think has won before. Brad has never won anything from this little experience, right? Okay, and I know that Brad was nice enough to actually purchase one of these actually through the Taste of Aloha experience. So I think that guy, because he's been with us forever, deserves a second one so he and his wife could actually toast each other in the same kind of glasses.
But Brad says he's not a member of the 365 Ohana, is what he says.
Why not?
Well,
Dude, you're making me look bad. What the hell? So, Brad may send you one anyway because you've been with us through everything on this whole experience. So you get one. But if you are on the group of 365 Ohana and you have not won something yet, let us know. The first person who says that they are on it and that they haven't won anything yet, I'll give them a wine cooler. So there you go. So We'll wrap it up unless there's any other questions about mortgages. And if you guys are watching this later on YouTube, go ahead and leave comments, and we can try and tap in and see if these guys can answer some of those questions for you. And we'll also have in the YouTube all their contact information. But for people on Facebook, the best way to reach you guys is
Marla@wynnteam.com or Scott@wynnteam.com.
And our website is lendingahan.com.
Yeah.
there you go. So more information about finances at that lendingtohand.com too. Scott does his own YouTube channel with more information about mortgages, and he also does some blogging. So you guys, experts right here at the table. We will see you guys next month in June, mid-June. We'll do it second Thursday of the month, and we'll bring you guys more information about financing and mortgages.
Two people. We've got Shauna and Lori are the two people.
Okay, who jumped in first?
I would say Lori was there first, but she didn't do it after you said it. So
Okay, has Lori won anything before?
No, she has not.
Okay, boom, you win.
Okay.
Hey, I'll PM you for your mailing address, and we'll get that out to you. Thanks, Lori. Okay, so we'll see you guys next month, and thank you both for being here and
Absolutely.
showing
Thanks for having
your
us.
expertise.
Yay.
Yay.
Bye, guys.
Aloha.